Welcome back to the Golden Suite 10-part mini-series. This is episode 4, Candlestick Pattern Mastery. I'm going to be showing you on the live charts now exactly where the best candlestick patterns work and also where they don't work. So we're going to jump into that right away. If you haven't already watched the 3 episodes previous to this, definitely jump on then. That's going to set your Forex foundation perfectly ready for the next 6 videos to come. So make sure you like and subscribe and you will never miss a video. So let's jump in now. Let's jump on just another snippet out of the Forex Bible that I've looked at in the 3 episodes previous. Just about Japanese candlesticks. So I just want to keep this really basic. Okay, I don't want to get into this too much. I want to get straight on the chart. So first of all, let's just talk about what is a Japanese candlestick. Now, as we know, Japanese candlestick tell us what the information that we need. Okay, they tell us information about what's happened over a specific duration of time. Helps us read the financial chart, and it shows us the high, the low, the open, and the close. So let's just break that down very simply. So for example, if I was on a 1 hour chart, this candlestick here would represent 1 hour of information. If price went up, down, if we stayed the same, so it was a neutral candle, etc. This candle is a bullish candle because price opened here on the hour, an hour later closed here. Okay, so price pushed up within that hour period. The highest that price went is the top of the wick, and the lowest that price went is the bottom of the wick. So as you can see, Japanese candlesticks tell us a lot about what's happened in a set duration of time. Now, this is a weekly time frame. This candlestick would represent 1 week of data. If it's a 5-minute time frame, it does represent 5 minutes of data. Okay, and that's exactly the same for a bearish candlestick. So when price opened at the top, within this specific time period, price pushed down, 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 then closed at the bottom. This is the lowest that price went, and of course the top of the wick is the highest that price went. So keeping it really, really simple. Okay, Japanese candlesticks is telling us the highest that price went and the lowest that price went and the open and the close of that candlestick throughout a specific duration of time, whether that's 1 hour time frame, 4 hour, daily, weekly, monthly, etc. So let's jump on the charts. Okay, so here we go. We have AUD USD, so I just pulled this chart up now. Just going to blinker out my EMAs for the moment. And what I want to do, I'm just going to go back. I'm going to find some good areas where candlestick patterns have worked, so you know what areas to look for and what candlestick patterns to look for. I'm also going to show you areas where the candlestick patterns do not work, because it's great you guys knowing and me teaching you exactly what does work, but if I can teach you what doesn't work as well, then your success rate is going to increase because you're going to also know not what to do. So straight away, I've literally just flicked this chart up. We're going to flick back anyway to a set duration of time. But this is a very weak example. Okay, but nevertheless, it's proven a point. Okay, so let's just take this down here. Okay, so like I say, this is a weak example, but I will show you just so you can understand. This is an example in its simplest form. So here we can see we've had a push, price is exhausting. We've made a new a lower high, sorry, there. We've came out, tested once. We've got a high test, then this engulfing candle, which of course creates that evening star pattern. Prices came up for one last test and also made another evening star and then dropped. So these are the sort of patterns that we're looking for. Okay, morning stars, evening stars, high tests, engulfing candles. This is all in your ebook pattern guide, the Golden Suite pattern guide, which you can have for free. It definitely help you out. It really will. So let's go through now. This is an hourly time frame, by the way, and we're just looking for any areas where candlestick patterns have and have not worked. So candlestick patterns work best when you've marked out a level of support resistance and also got a bit of an uptrend or a downtrend there. That's when they're acting best, when they're showing rejection of something or a continuation of a certain level. It's really important that you remember that. They only work best when there's a reason for candlestick patterns to be rejecting or a reason for them to be showing a continuation. Okay, so I'm just literally just pulling back so then we can start scrolling forward just anywhere random in the chart. I mean, here we do. So let's see what we can find. Okay, so first of all, now, if you see your candlestick pattern and you're like, okay, that's a high test. So for example here, we got this high test, right? We got this high test. Now, you need to ask yourself, okay, why is there a high test here? What is the high test rejecting? Well, first of all, we can actually see that this high test is rejecting the previous high. Okay, that's fine. That's just a single confluence. It's not really that great. Okay, what else is going on? So, I mean, don't forget, guys, I'm just showing you one time frame. I do conduct multi-time frame analysis, which is how I like to trade. So we can pull this through here and we can say, well, we've actually had a trend line break. We found a bit of a low down here, like this. We've pulled back, and now we're pushing. It's not really a great zone to be taken as short, is it? Why? Because we found support. We've broke out of the trend. Okay, we've created a new high here. We've pulled back, and our price is trying to push again. So as you can see, price obviously did push up. So at these sort of levels, you do not want to be looking for your candlestick patterns. You do not want to be looking for them because they're not valid. I mean, here is where you'd want to see the pullback, and then you've kind of got your low test and your engulfing candle. You've come back to reject this downtrend, for example. Then you can go, okay, I'm now looking for a buy. This is the sort of areas that you want to see them. You don't want to just see them few and far between in the middle of a run. It's really important that you remember that they have to be showing rejection of something. So let's just keep pulling forward here. Let's see what else we can find. We've got a bit of an uptrend. I'm just going to keep this really simple, guys, all right? As simple as I can. So here we can see we've got a bit of an uptrend coming through. We've got 1, 2, third touch. We broke out. We've pulled back. Okay, pull back to this little level through here. Very nice, like that. Why have I marked this level off? Because 1, we've broken the uptrend. We're pulling back. We've also got this level 1, 2, 3, 4, 5. We've come back to test it here. 1, spiked through. Shown even more rejection here with this kind of railroad tracks going on. But we've got a couple of wicks at the top. So it's not for us with massive confidence. We're going to continue. Finally broke out. We've come back. What have we got? 1, 2, bit of a tweezer tops going on there. Lovely. Sort of candlestick pattern that we love to see. Look to take your short trade. Stop just above the high. TP. You're looking for about always a 1 to 2 really if you can. Okay. Stop loss to entry at a 1 to 1. So did we get a 1 to 1 here? We did. We got to a 1.2. Great. So we didn't quite get to the 1 to 2. We did after she came back for one more final boom. But I'm going to move to that in a minute. Okay. This is actually quite a good example. So here we'd have had stop loss to entry at a 1 to 1. As always, protect your capital, guys. #1 rule. Then we've got taken out of entry. Okay, so 0-0. Okay, it's not 1-0 to the Forex markets. It's not 1-0 to me. We took a nice trade there. We've got to stop that entry. No problem. So what's our next move? Well, price is obviously pushed out to the upside. We then mark this high off here. Zoom out. We've got anything else going on. We project this through. We've actually got a little bit of a level here as well, as we can see. And a kind of downtrend going from here. Nothing really significant. But we can see that this side has been tested very nicely. Big spike. And sure enough, got a little bit of a high test. Then we've got this really nice, strong, bearish candle. And then we've had a bit of a pullback. And then what do we get? The evening star. 1, 2, 3. Creates a nice little short pattern. Lovely. You can go above this side if you want to. Okay, it's around about 27 pips-ish. Look for that 1 to 2 minimum. Sure enough, we got it. Really nice trade, really simple. You can see it just dropped straight into profit. This is what we're looking for. Now, the reason why I love this example, and this is stuff that I love teaching you guys, is because first impressions, look, we've had wick. We can see this here is a strong level. Price is broken, come back, but not always on the first push. We get that big drop like this. We don't always get that big drop. Came back for one more, just that one more push up to really test these highs. And then we got the drop and then we made our money. Okay, so that's, if you risk a 1%, that's 2% banked. All because we just charted on some very simple analysis and then we waited for our candlestick reversal patterns, high test, evening star, engulfing candle, sort of stuff that we want to see. Okay, so that's why it's important to stop loss to entry at 1-to-1, because sometimes the first breakout and pullback isn't enough. It comes back for one more and then we get the drop. So always move stop loss to entry, guys. Okay, and then when we start getting a bit of a trend going on, like we can see coming through here, this is when we can really start using our candlestick patterns for continuations. So as you can see here, we're in a clear downtrend. We've broken the last low. We've come back. We've actually ended up getting a bit of a high test there. But also got wicks at the bottom. We've got a bit of tweezer tops there, just showing rejection of this low. Let me just zoom in. It's all the sort of stuff that we're looking for. Once you plot your zones, guys, and you know how to plot these zones, which I'm going to be teaching you how to plot trend lines in the next episode, episode 5. Then episode 6, I'm going to be showing you exactly how to plot these minor and major zones, just like I'm doing now with some simplicity. You'll be able to do that. So we can see here we've had this nice little low form. We've come back to retest this low, and then we've got the little tweezer tops there. So we could have took that. However, it's nice to see the trend line get tested. Don't forget, trend lines are just a guide, so you can pull that in like that if you really wanted to. All right, it's just a guide. It's more of a zone like this. How I draw my horizontals is how a trend line basically is. So I don't expect it to touch pinpoint perfect. So we got the tweezer tops. I wouldn't have taken that because I would have still expected a little bit more of a push up. So let's go back to replay here. Go back to replay. This is what's going on a 30-minute time frame. 30-minute, yeah, we've had that nice little high test and engulfing candle, so it's looking good. 15-minute, also looking good. A little bit of a high test there. We've also got a bit of a 15-minute evening star. You can actually start going, oh, well, actually, we might actually get a bit of a flag playing out here. So we just start, there we go. Look at that. That's what you want to see. Nice pullback to the trend line. We've got this nice evening star candle there once again. So we've got one evening star, two evening star. Now the reason why I'm kind of showing you this double, 1, 2, is because it's going to be very, very important when we get to episode 7 and 8, where we're stacking up confluences and I'm showing you how to enter trades. It's very important to remember the double tap, okay? Really important. So you can see again, once again, we've got our candlestick patterns there. Perfect. We can then, of course, look to take our trade. Look for a 1 to 2 minimum. You go even further than that. You can just, once you do a higher time frame analysis, but I'll show you 1 to 2 minimums for this because I haven't done my higher time frame analysis. Just trying to really show you and emphasize how important it is to be able to know exactly where these candlestick patterns work. Essentially at double zones, right? We've got a downtrend and then we've got a horizontal. That's where we're looking for our candlestick clues. And then we can see how this played out. There we go. Another simple trade, 1 to 2 banked. And then we can just follow on like this and just keep looking at our candlestick clues again. So once again, yes, we haven't come back to test this last low there. So this would be more of an aggressive entry for me, but we did get that nice evening star on the trend line, which of course absolutely tanked. So it all comes down to your preferred risk factor. Mine is I need to see a double zone, whether it's a horizontal or a downtrend, an EMA. I need to see more than one confluence in terms of support and resistance for me to be able to take a trade, because single zones are generally quite weak and they can be broken very, very easy. So very, very simply, we need the candlestick patterns, which are in your candlestick ebook, to be shown rejection at specific levels where there's a trend line, a minor support and resistance, a major support and resistance, which I'm going to be showing you exactly how to plot in episode 5 and 6, which are going to be next. So make sure you watch them, because this is all going to glue together. I'm just showing you everything step by step, so it all glues together in a step-by-step process. And by episode 10, you're going to have loads more clarity, loads more knowledge to help you improve on your Forex game. So where doesn't this pattern work? Well, and candlestick clues. Well, of course, they're not going to work if we're just looking for them anywhere. You know, if we just say, we pick a random point on the chart and go, oh, great, there we go. I've seen a low or high test. I'm going for a trade now. For example, here. Oh, cool, yeah, look, there's a low test. Well, what's it actually rejecting? Well, nothing. And then sure enough, prices drops. They don't work. They need to be rejected in a zone. Please, please remember that. If it's rejected in no man's land, it's no good. And what have we got? We've got one singular zone there that price is trying to reject. That's nothing. A single zone are usually very weak, as I just said, and this has just proven that statement. It's just crashed straight through. So it's very important that you're plotting these zones correctly, these double and triple zones. Let's find another example. So again here, we've got a little bit of a high test. Sure enough, price is pushed up. You cannot just end up with that high test just because it's testing these highs here. Okay, it will not work. We need to see more of a level. For example, if there's a downtrend coming through here, then yeah, and we got this nice little spike out, we'd definitely be looking for a short there. We'd also be looking at the higher time frame to have them backing us. All right, I can't emphasize enough that I'm just showing you a 1 hour time frame. I start on the weekly and I go through and I pinpoint my entry on a 15-minute time frame most of the time. Which is how I get such a small stop loss and a pretty quick target hit most of the time. So very, very important, okay? The candlesticks need to be rejecting a specific zone. It's very, very important that you realize that. Now here again, we've got a bit of a level coming through here, as we can see. We can see here we've had a few spikes. We've come back above, retested that level. We've came back down, finally broke, then came back to retest. We got the evening star. 1, 2, 3, drop. Perfect. And just continue to drop. This is really powerful stuff. And it definitely shouldn't be overlooked. Because if you're patient, this is the sort of trades that you can be catching. Just be patient. You've got to recognize what's happening. Perform and conduct your analysis, which I'm going to teach you over the rest of the mini-series, and then use your candlestick patterns to execute trades. Okay, and engulfing candles, another one of my favorites, as well as the evening and morning stars. You can use them as well, which are always pretty good. I mean, even here, okay, we can see. Now, I'm not going to paint a picture of an absolute perfect world where we're going to enter trades and we're going to be, you know, banking profit every 2 minutes, because that isn't the realistic expectation. Okay, there will be break-evens, there will be losses, but as long as your profits are more than the losses, that's all that matters. So we can see here we've had a really big impulse move, prices pulled back. What do we get? 1, 2, 3, evening star. Bit of a double high test candle as well, creating the tweezer tops. I'll be like, okay, great. I'm looking for a short position here. Minimum 1 to 2 is what I'd want to see. Okay, stop loss to entry at a 1 to 1. Did we get the 1 to 1? Ooh, not quite. That would have been a 1 to 1 here. Let's see what happens. There we go. Okay, so it's important that I show you this and not just try and make everything look so wonderfully amazing, because how amazing Forex is, and for those of you that have been following me a long time now, how passionate I'm about it, and I absolutely love Forex. You need to understand that if someone's teaching you, that it's not, the person that's teaching you should not be portraying that it's 100% a perfect world scenario, because it never will be. There will be little losses like that where these candlestick patterns don't work. Now, yes, I've just shown you off a 1 hour time frame. If I looked at my higher time frame levels, I may not have entered this, but still, I've shown you an example, okay, of where it will not be perfect every single time. And you need to realize that now at the start of your journey. You need to realize that. But as long as these strategies play out more times than they don't, that's when we really start to see the gains. And that is exactly what they do. They play out so much more than they don't. It's great. So let's take another look. Do one more example, and then we will of course move on. So this is quite a nice example here, right? So you kind of got this nice big level coming through here, as you can see. Okay, we've got a bit of a nice flag there. We've broken out, we've pulled back, started forming another flag here. Just got to love it when price mimics what's happened previous. Starting to get a bit of this going on. So I'd be looking at that now. and I'll be like, okay, we've come back up to retest. I need to see an entry. So what I'd actually be looking at here, I would have entered more than likely off of this candle. This high test, it's come up once, we came up twice, cleared the high, nice rejection. That's where I'll be looking for a short off my high test candle. Stop loss about 10 pips above the high, so around about 20 pips. Take her for a 1 to 2, which is coincidentally at this last low. Absolutely love it when that happens. And then away we go. And when you're back testing, okay, it's important that you can see what it takes for price to get down here, because you can see we entered, we came up, we dropped the profit, we came back into a little bit of a loss, and then we finally dropped again. Now, I'll actually tell you something here. I would have been stop loss to entry there. I'll come back, I would have got stopped out at entry. So that'd been a 0% trade. But then, what would have I done? Evening start, 1, 2, 3, straight back in the game. Straight back in the game. Looking for that 1 to 2. But this is what I absolutely love, okay? My original target was here. I'm going to stick at that original target. But it's come out, took me out of entry. But I've actually got a much better entry. I'm now in for 2.8%. Give or take. Look, 2.8%. Perfect. Came up, boom, dropped straight into profit. So that 1% that we just lost, not on this trade, the trade previous, we've already got back 2.8%. So we're up 1.8. This is why risk reward is so important, and getting that stop loss to entry can actually be very beneficial. Look for your candlestick clues, learn to plot the zones, which I'm going to teach you in the next episodes, and your Forex trading will become so much easier. You can have a mental checklist. Okay, this is my zone. I'm going to wait for it to break, pull back. This is the candlestick patterns that I want to see, and then I'm going to enter a trade. And that's how you can make Forex so much easier. So I hope you enjoyed this video. Next up is going to be trend lines. We'll show you how to plot trend lines, how to use trend lines to your advantage. You might think you know how to plot a trend line at the moment. Still watch this video because I'm going to show you a lot of decent trend line tips and techniques.